are saying that Gustav is now moving west-southwestwards, and this is important. They're forecasting a slow re-strengthening over the next 48 hours, and Gustav could regain hurricane strength by Friday. So this is going to be a cause for concern for the oil markets. And do remember that it's been flip-flopping around, really. It was a tropical storm, then it was upgraded to a hurricane, downgraded once again to a tropical storm. And now the fear is that it could strengthen to a Category 3, possibly even Category 5 hurricane that would rival what we saw 3 years ago from Hurricanes Katrina and Rita. And you saw the devastation that wrought in the US, in the Gulf of Mexico oil patch. As far as the companies are concerned that have operations out there, they're battening down the hatches, of course. They're not taking any chances. They're taking all the necessary precautionary measures. At this stage, production hasn't been disrupted. Essential personnel are still there. Non-essential personnel have been evacuated. But we are hearing that Total said it may begin shut-ins on Saturday. And we're also hearing Reuters reporting Shell, the largest producer in the Gulf of Mexico, says production there could be affected as early as Thursday, as early as today. Mandy, back to you.
Thank you very much for that, Sri Jagaraja. Well, now let's get more analysis on this with Jonathan Cornefeld. He is Director Asia at Hudson Capital Energy, joining us here in our Singapore studio. Jonathan, it certainly seems as if suddenly all the oil bears have disappeared and there's a whole pile of bullish factors lining up here, such as renewed weakness in the US dollar. We've got tensions still going on between Moscow and Georgia, and now throw Gustav into the mix. How much further do you think prices can ride on this?
Well, we're certainly at the top of the range right now, the 112 to 118 range that we've seen lately. I think the bullish factors were always here to begin with. We were always in the middle of hurricane season for the last couple of months. There's a lot of reasons the market came off from the highs of 147. Since we've started coming off, the market has really been searching for a point where demand is restrained but not destroyed. Now, we've certainly seen a good amount of demand destruction in the last couple months, and in the last year, in fact, in the United States. The EIA just revised down June demand for crude oil by about 5.6% year on year in the United States. And last week, we saw the largest weekly decline in a year for petrol demand. So there's demand destruction continuing in the U.S. It's sort of leveled off with these lower prices. Same thing in China. There's for a couple months now, China was a net importer of petrol. Now they've sort of stopped that, and PetroChina is exporting about 60,000 tons of gasoline to Indonesia. There's also been some fall off, as well as China, but also Indonesia and Vietnam in their diesel demand. Now, while that demand has fallen off a little bit, it's been quite extraordinary and above trend, really, for the last year or two as compared to like a long-term trend. So without a larger macroeconomic collapse in Asia, which I really don't see happening, then the demand is going to stay above trend. It's just going to lessen compared to what it was in the first half of the year. Also, there is the problems in the Caucasus with Russia, but the world seems to have moved beyond that a little bit and is now focusing more on what's going on between NATO and Russia and how the greater repercussions of this are going to come around. There's a little bit of premium priced into crude because of that, but people are more choosing to focus on, as you said, Hurricane Gustav, which is currently traveling over the mountains in Haiti right now, so it's lost a good deal of strength. How
much do you think, in terms of a Gustav premium, is built into the price? In other words, if the hurricane just misses all the oil installations and turns out to be a bit of a damp squib, how much might come off the price of crude?
I think we'll go below 110, to be honest with you. I think this might be the event that pushes us below 110. In the last couple days, nobody was even paying attention to this hurricane, even Monday morning. It wasn't until really Monday or Tuesday that the hurricane premium entered the market, pushed us back above 115 and now back towards 118. The shorts have either gotten out or are flattening up. There's still some shorts out there, so the trend is lower. It's just going into the long weekend in the United States. Nobody wants to be short, especially with the hurricane predicted to hit landfall on Monday. Nobody wants to be short. Everyone's either flattening up or getting long just for the short term. But at the same time, we've seen an enormous amount of put buying, which is the right to get short in crude oil. We've seen an enormous amount of put buying, which means that while people aren't ready to sell futures or swaps, they're buying puts, which have limited loss attached to them. So in case this turns out to be a non-event, the market, I think, is going to come roaring off, maybe below 110, and there's going to be a lot of winners for these people who bought put options.
Jonathan, a lot of commentators are saying that Gustav presents the biggest threat to US oil production in the Gulf of Mexico so far this hurricane season. Does it surprise you then that the market had a relatively muted response to the upside? I guess about a month or two ago, when the bullish momentum was at its height, you would have seen a $5, even $10 a barrel move. Does that tell you that the that momentum has really started to come off now?
Yeah, this is really the second time I've been surprised. The first time was with the Russian invasion of Georgia. I really expected the market to bounce on that, and it didn't. The market sentiment was just, at the time, just pushing lower, pushing lower. Now we seem to have settled between 112 and 118. So on top of the problem in the Caucasus now, you have Hurricane Gustav, which, you're right, a couple months ago would have propelled us a lot higher when the bullish momentum was with the market, but now it's sort of a bearish, looking for a trend momentum. So it's just really just people getting flat and getting longer. So I think the market is really waiting to see what happens. And it is, you're right, it is a very dangerous situation right now in terms of production facilities in the Gulf.
We do see Gustav pick up steam, and to the point where it rivals Katrina or Rita 3 years ago. How much is that worth on the upside? Could we challenge the highs of July?
I think, well, you know, that's very hard to predict, but with the amount of shorts that are in the market right now, the hedge funds are still short. So if we really start to see this thing go where we don't want it to go, and you start to see production facilities actually destroyed again and badly damaged, then you're going to have all the shorts heading for the door at the same time. It's going to push us well above 130. And then what that does to the market beyond that, we could definitely see the 140 range again. But at the same time, you still have the slowing economy, the very slowing economies in Europe right now, as well as the bit of maybe a recovery we're seeing in the United States. So I think we would definitely see a pop, maybe back up to above 140, but then I think the market would come right back off again, depending on how bad the damage is.
How strong has been the political angle in the sense that, you know, there are whispers in the market that perhaps central banks have been buying US dollars to try and keep oil prices low and therefore trying to stave off recession in a number of economies. Do you think that's true?
Well, there's definitely an angle to that. It might possibly be true. The problem is if the dollar really starts to strengthen, especially in the United States, then you're going to see the U.S. consumers start to buy more imports from other countries. At the same time, they're going to be buying less domestically produced goods, which could really prolong the recession and, in the longer run, maybe keep the dollar from actually recovering to the levels it would have recovered to without this sort of intervention. So intervention, I think, maybe sometimes helps in the short term, but it always leads to longer-term problems and longer-term implications. And if what you said is true, then there may be bigger problems down the road because of that.
On the currency markets, the dollar has seen something of a renaissance recently. Is that another reason why the bears seem to have the upper hand at the moment, barring the hurricane fears that we're seeing right now?
Right, but as I said about a week ago, that I think the dollar really has sort of, it had this amazing move, especially just look at the euro, from about 160 to say 145, 146, and now it really can't break through that level. I think just like the dollar is behaving just like any other market, that when it has a big move, it will overshoot where it's supposed to go. The crude oil overshot on the way up. Now I think it's overshot on the way down, and that's why it's been between 112 and 118, trying to figure out the right range. I think the dollar also overshot, and it's also trying to figure out where it should be right now, and a lot of that depends on growth in the Eurozone, as well as a recovery in the United States credit markets as well.
We have to leave it there, but thank you very much for your discussion today.
No
Jonathan Kornefeld, Director Asia at Hudson Capital Energy. Well, we're going to go for a quick break, but we're also going to cross over to Shanghai next for an update of the market.